Okay. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. We are into the first week of March. During this Asian session live market analysis and the forecast webinar, I'm going to give you the session-wise forecast for this week, 6th to 10th of March, and also discuss about the market reading and the trading strategy. So today we are on March 6th on Monday. I'll give the forecast for the entire week, and then I'll review it on 10th of March, whether the market has moved in line with that of the forecast expectations or against. So that we will be able to do it in order to decide on the dependability of the forecast. So there are three components in my trading system, namely the derived forecast, and with the help of the market reading and the market analysis, we try to fine-tune the forecast, and then we also expect the unexpected. So use the trading strategy, that is, use the hedge to limit the risk when the position is taken, and once the position starts making the profit, we keep stop at entry and remove the hedge order. Thereby we don't incur any loss. So this is the first step, namely the loss prevention technique. Once the loss is being prevented and once the going is good, we are able to see the position is making profit, we can trail the stop in a profit making position and maximize the profit. So that way we focus on the trading strategy in a systematic way, so that when the going is good, we try to reap the fruit out of that. We don't miss opportunities. Now this is the forecast sheet for this week, Monday to Friday, 6th to 10th of March. And each day you come across the sessions, the three sessions of the day, Japanese, European, and the US sessions. And these sessions, the players are expected to make some specific moves in the market. And with the help of such identified moves, we will try to decide on the trade, whether we can do the buy and sell or a sell and buy trade in a specific currency. I have all along explained that in a currency, when you use the live market quote page, and in a currency, when the spread between the high and the low is more than 40 pips, then you try to commit the position in those currencies. Here you come across on whatever the low they set on Friday is still being shown. Actually the low is 1.0600. So only in the case of euro, others all fine. So when the spread between the high and the low is less than 40 pips, try to avoid committing positions, because they may not make any significant move in those currencies until otherwise they make 40 pip spread. What they do is they hold certain currencies and move certain other currencies in order to handle the crosses. Also, we will be able to identify that with the help of the net changes. So whenever you come across the Euro GBP showing negative net change, USD is also showing negative net change. That means it is a contrarian move. That is, Euro and GBP are showing the USD gaining move, USD is showing USD weakening move. And this is a contrarian move you come across here. And when they do this, we understand that they are handling the crosses. So whenever they are handling crosses, there is no point in committing positions in major. What will happen is the major, they might be holding and make the moves in the crosses by making specific moves in any one of the currency which is responsible for the movement in the cross. So invariably what will come across, that what the currency you are committed, they might hold the other currency. Suppose Euro GBP, you are trying to take a position in the Euro GBP cross. They might hold Euro and make quick move in the case of GBP. So when they make such contrarian move, then if you have committed a position in Euro, your patience will be tested, because it will be consolidating, whereas GBP might be making big move. So each time whenever they are making the contrarian move, it is better to avoid taking positions in them until such time they are able to bring in the USD weakening or the USD gaining move. Then it is easy for you to commit a position and that will yield good profit. Now, today is 6th of March. They are expected to make the swing and rise move during that of the Japanese session. And week beginning false move could be seen during that of the European session. Swing and slide could be seen. And then US session again, they are expected to gain the levels. And you know that last week I was explaining that they are expected to gain the levels in the month of March, and they used Ellen's speech as the trigger. And so they need some act as a trigger so that they will be able to make either upward or the downward move. So this upward move, after doing a prolonged lower level consolidation last week, they quickly killed level on Friday, and they are expected to continue the gain with some swing on specific sessions, and then you will come across more gaining moves in the market happening. So tomorrow, 7th of March, swing and slide is expected to be seen during Japanese session, followed by the swing and rise and swing and form up during European and the US session. Then Wednesday and Thursday, they are expected to make the dip and rise during that of the Japanese session, and swing and rise during that of the European session, and then swing and slide during that of the US session. So both days you will come across similar moves happening in the market. On Friday, when the non-farm payroll is going to be announced, they are expected to gain the levels during that of the Japanese session and start making the slide during that of the European session before the non-farm payroll in the case of Euro and GBP, and start gaining the level soon after the release of the non-farm payroll and continue to swing at the higher level during the US session, and then start gaining slowly the levels as the intentional move. So you could come across the players making either way stop-ins, initially a drop before that of the data release, and afterwards they are expected to slowly gain the level on Friday. Then following week, next week, that is 13th to 17th of March, they are expected to make the swing and rise move as the intentional move. So these are all the expected market moves. You know that month end and the month beginning time, they will try to bring in the volatility, and that doesn't mean that Euro has become weak or GBP has become weak, etc. They try to hit the stops in that of the derivative market, and that is why they make some extreme moves during that time frame. And also you come across extended stop-ins. They had done it in the case of GBP to start with last week, followed by that they made the extended downward stop-in in the case of USD and then start gaining the levels. So this part of the game of month end and the new month beginning time. So you should not become bearish or bullish following it. And what they intend to do, we need to read during that of the trending time. Now the levels in which they are expected to make their swings in this week. Euro, they could come down to 1.0575 and then go up to 1.0950 area. So far they set the low as 1.0600 and 624 is the high. Then in the case of GBP, 2275 could be the low. They just formed the low as 2281, and then they are holding it to gain the levels, and 2750 could be the high. So far they set 2301 as the high. Then in the case of yen, they could come down to 113 and then start gaining the level. So far they set the low as 113.72 and the high as 114.14. They could go up to 115 slowly. Then in the case of CHF, 0.9900 could be the low, and so far they set the low as 1.0076 and 1.0125 could be the high. They set the high as 1.0097 so far. Then in the case of Canadian dollar, they could make the swing from 1.31 area to 1.3425. So far they have gone up to 1.3399. On Friday they went above that of 1.34, and they are expected to come down to 1.31, and so far they have come down to 1.3377. Then in the case of Australian dollar, they came down in order to make a profit booking and accumulate the buy positions below that of 0.76. They could come down to 0.7575 area. The low they are set is 7571, and then they are expected to gain the levels and go to 78 area. So these are all the expected ranges in this week. They could make the moves in the market. Watch carefully and then we will come to that of the market reading. Before that, there is a question. Satish, why there is too many variations in open price from many platform providers? See, this is up to them, so we don't have any control over them. And what the platform providers do is they switch on the server for the trading during different times of the day. So some people open it by 12 GMT or 0000 GMT, they open it. And certain other people open it by 2:30 GMT. So you come across variations with regard to the time they open the platform, and also based on that the highs and the lows are being shown. And the right way of opening it will be 0030 GMT. Then you will come across the right highs and the lows set in the market. My humble suggestion to that of the traders will be, you watch many of the code pages and also your trading platform and try to arrive at what could be the possible high and possible low. You have to note down wherever you come across the levels are closer to a particular level. So suppose one platform is showing 1.0623 and another one showing 1.0624 as the high, then you can just find out which could be appropriate level, and that out of experience you will be able to decide and then make use of it as the initial high and try to watch that. Because earlier I was able to get the feed and which was directly from the interbank treasury and that was showing exactly the highs and the lows. When they found that I'm able to track the intentions of the players and also top in FX Street and other websites, they stopped providing such feeds. So I have to depend upon the live market code page now, and there again they are giving different time frame. They are giving different time frame. So I have to just use the GMT time frame separately and the code page separately, because see, they think that by supporting that way I will stop using the live market code page, but we have to be smart enough to find a solution. Ultimately, we are using it only as a tool. This is not the trading platform. This is only a tool with which we derive our forecast or our to read the intentions of the players so that the players cannot stop. Now coming to that of the market reading. So I noted down the initial lows and the highs around 3:30 GMT. Euro formed the low as 1.0600. Currently it is around the same level, and 1.0624 is the high. The spread is about 24 pips. In the case of GBP, 1.2283 was the initial low. They just came down to 81 and then started gaining the level. 1.2301 is the high. Still, the spread is not more than 40 pips to commit a position. Then in the case of yen, 113.72 is the low, 114.14 is the high. They have not breached the low or the high, so which indicates that the spread has become more than 40 pips, and we can try to watch and commit positions when they come down and not cut the low for more than 30 minutes of your observation. You can take a buy and quickly book profit when they are gaining the level. Then in the case of CHF, 1.0076 is the low, 1.0097 is the high. They are not breached the low or the high. Then Canadian dollar, 1.3377 is the low, 1.3399 is the high. They are not breached the low or the high. Then again, in the case of Australian dollars, 75.71 is the low, 75.95 is the high. There again, they are not breached the low or the high. Excepting GBP by 2 pips on the downside, all other currencies, they are not breached the low or the high. It indicates that they are simply holding the platform. They are simply holding the market in order to induce the traders to commit positions by doing various type of analysis. Then later on, they are expected to start making their moves as envisaged by that of the forecast, like swing and drives during that of the Japanese session, and then make high level swings and further gain during early European session. And then late European session, they could make a slide as the weak beginning false move, and then lower level swing, and then continue to gain during that of the US session. You must move and then understand how they are making the moves above that of the initial high or below that of the initial low. The time taken for such move indicate whether it is a stop and or a false move or an extended move or intentional move. Then once you identify the type of move, you find trading becomes a child's play. Now the recommended trades for the day, you can try and take a buy position around that of the low, 1.0600 in the case of Euro, with 1.0650 as the exit and 1.0570 as the hedge order to limit the risk. In the case of GBP, 2285 we could keep the buy limit order, and 2360 could be the exit, and 2250 would be the hedge order to limit the risk. So once your order is filled and the position is taken, you keep stop at entry. Once the position start making profit, till such time keep the hedge order to limit the risk 30 pips below, and then once the profit of 15 pips is seen in the buy position, you keep stop at entry and remove the hedge order. Then they will slowly gain the level. You wait for the early and the late sessions for the moves to happen. Mid session, avoid doing any activity. Late session, they will start making good moves. At that time, you try to keep stop at entry and then try to watch how exactly they are gaining the level, and watch and close by end of the session. Or trail the stop and trail the take profit order. That way, you will be able to close the position with a maximum profit. This way you can do it even as an intraday trade. Session-wise trade, you watch the session times and close it. Intraday, you wait for any one of that to get closed. That is either the trailing stop or the trailing take profit order. The market can hit and provide you the profit. Now these are all the market timings. The week following it will come across the daylight saving system coming on. See, from 7th November onwards, the daylight saving system was switched off, and now from the end of second week of March, US will switch over to the daylight saving, and then the last week, Europe will also switch to that of the daylight saving. So at that time, I will show you the slide containing the timings for those days. So there, once US gain 1 hour as the daylight saving, then what will happen? The session starts by 13:30 GMT. You will come across the European session will get squeezed to 1300 hours, and 13 to 13:30 will be the gap time, and 13:30 onwards will be the US session. The US session will get over by 20:30 at that time. Then no change in the Japanese session. Then once Europe also comes to the door of the change, that is adopting the daylight saving, then Japanese session will lose about 30 minutes. Japanese session will get over by 7 GMT. 7 to 7:30 will be the gap time. Then 7:30 onwards will be the European session up to 13 GMT. So I will show you the timings. You can follow those timings during the appropriate time, so that we'll be able to really understand when the early and the late session, they will make big moves for you to enter and exit out of the market. If there are any questions, you can ask me the questions. I'll be willing to answer to the questions. So I'll come back on 10th of March, it is Friday, and try to review the forecast, what I have given it now, and show you how far the market has moved, either in line with the expected market moves or against. Then Friday, the non-farm payroll is going to be announced. So there will be the spike trade call before and after non-farm payroll. So I'll give the spike trade calls before the non-farm payroll and give you the remark of the trades what I have given, trade calls I have given before that of the non-farm payroll, and see whether those trades have really made us good profit or fortune, and how exactly we should be able to capture profit during such uncertain time. Many of the people think that they are all dangerous time frame, and it is better to conserve the equity and keep away from that of the market. And only on academic interest we can watch the market. But when such big moves happen, any trader will be willing to take part so that he will be able to capture a good profit. But the only problem is the risk reward ratio is very high. In the event if the market goes against, the risk will be higher. But if you have a perfect understanding of the reading the intentions of the players, then you'll be able to really capture good profit. Then there is a question. Okay, can you please let us know gold forecast? Gold is expected to consolidate near the low and start gaining the levels in this week onwards. So you could come across gold gaining considerably from next week. Till such time, it will do the lower level consolidation with brief downward stopping. And next week onwards, you will come across sizable gains in the case of gold. And overall, you will slowly come across US dollar losing the strength. This is what normally happens in the market. During that of the yearly trend reversal, the players try to bring in US dollar strengthening moves, create the feel to that of the traders that it is unstoppable. US dollar could continue to gain the levels, but that will be for a brief period and for about 1 or 2 months during the yearly trend reversal time. Afterwards, they will continue to weaken US dollar and continue to gain the levels in other majors. So this is what they do every time. We need to understand how the players are doing the yearly market moves. Once you know how exactly the yearly market moves they are making, then you'll be able to really do phenomenal position trade. That is, take the position and hold it for a considerable period so that you will be able to really maximize the profit. And for that, in order to understand that whatever the session timings I have given it, if you follow those timings and see how exactly the players are doing in a very systematic following the timings, the moves, then you will be able to really understand that these timings are very important. Once you understand the timing, then you will start appreciating the forecast. Trend. If we see a pair by the high and the low in a session and the market does not move much, should we hold on till another session or close the trade? So suppose you are taken a position and the position is not showing profit for 2 hours, then you know that they are going to make an intentional move against your position. If they are not showing profit for 2 hours in our position, that means it is an intentional move for 2 sessions and you are holding a position against their intention. You immediately close the position with a nominal loss, or if there is a small profit seen, or with stop at entry. And if the position shows profit in 30 minutes of your taking and you are able to keep stop at entry, then if the stop at entry is not filled for another 30 minutes, understand that they are making the intentional move in your favor. Then you can wait for 2 sessions and the start of the 3rd session close the position with a maximum profit. If you are not able to read the intentions clearly, then use the trailing stop in a profit-making position. If you want to finish the trade within the session, then use the time frame and close exactly by end of the time. And if you follow the forecast, then you find that they're going to make a swing and rise and then swing and firm up. Then they are expected to make a continuous rise. You wait till the end of the Japanese your session and close it. So that is why I'm giving the forecast here, so that you will be able to take appropriate decision whether you have to close the position within the session or within the day, or even hold it for a longer period. Hope it explains this answer to your questions. Any other question, please? Okay, no more question coming forward. So let me conclude the webinar. I take this opportunity to thank FX Trade for the facilities provided to present the webinar. I'll come back on Friday and review the forecast and also explain to you how the forecast was dependable and how the market has moved in line with the expectations of the forecast, including the time frame. Then you will be able to really appreciate that how the forecast is eliminating the risk or uncertainty for you and slowly build up the profit without becoming emotional trader. That is, control your fear as well as don't become greedy. Thereby you will be able to slowly build up your equity. Wish you all the best in your trades. See you on Friday.